Hello viewers, we'll be going over natural gas. In this video, we'll be going over the day-by-day probability model, the technical performance of each model, how we find the models, comparing the current trend with the trend in the past, and we'll go over the day-by-day forecast for natural gas. So back to the technical analysis. Today we're up 3.8% on the 1 hour chart. We were touching overbought RSI early this morning. As for the 4 hour chart, we have now reached to overbought RSI. And at the moment, onto the daily chart, we are now approaching to positive MACD after reaching quite oversold RSI, and we see a nice reversal in play. If we do manage to continue on higher, the next possible resistance will be the 100-day 50 moving average, this red line. As indicated in the past, back in May 5th, we encountered that as our resistance, and the current resistance for us now is around a price of $1.89. That will be our first immediate upside resistance. And to the downside, if we were to reverse and head down lower, the next possible support will be the 9-day moving average and 18-day moving average, the blue and purple line respectively. And that support level is roughly around price of $1.67. And around that range, we see previous past support levels dated back all the way to May 13th as well. And if we do manage to touch support, that price movement to the downside is roughly around 7.5%, and to the upside to hit resistance, that price movement to the upside is roughly around 5%. So now let's head to the day-by-day probability model. These models are now available in the link below, so do check it out. So as we progress to the 7th day, we have a 7% chance for natural gas to climb higher between 0 to 8%, and a 7% chance for natural gas to climb higher between 8% to 16%. And to the downside, we have a 50% chance for natural gas to fall between 0 to negative 8%. And further extreme case, to the downside, we have a 35% chance for natural gas to fall between negative 8% to negative 16%. So now let's examine the day-by-day forecast for natural gas. So as we progress to 1 day out, that will be a Tuesday, and 2 days out will be a Wednesday, and so on. So we have 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these models we should focus on? Ideally, the model that is best matched to the current trend. The blue line is our current trend, and overlapping it is the trend that happens to be the best match. So right here we have our current trend, and the trend below is a trend that we found on the line graph, and this dates back to October 17 to October 17, 2008 to January 14, 2009. So let's begin comparing both trends. So on the current trend, we start off at the bottom Bollinger Band, and then we average above the middle Bollinger Band for several days, and then we proceeded to average below the middle Bollinger Band. And now in the trend in question, so we start off at the bottom Bollinger Band, averaged above the middle Bollinger Band for several days, and then towards the last half, we averaged below the middle Bollinger Band. So what we have here is 1, 2, 3 points. And on the current trend, we also have 1, 2, 3 points. So there's reason to believe the trends and patterns are somewhat the same. The outcome and forecast should be fairly the same. So the model that we just examined was October 17, 2008 to January 14, 2009. Back then, natural gas was down, let's say, around 11.3%. And if we head back to the day-by-day probability model, and if we progress to the 7th day, that coincides with this standard deviation of 36% chance of being it between negative 8% to negative 16%. So let's examine closer on the technical performance of each trend. On the current trend, we're down 44 basis points, or 44% from monthly high, up 11% from monthly low, up 2.6% from 10 simple moving average, and down 1.6% from 20-day simple moving average, and down 12% from 50-day simple moving average. And now let's compare that to the trend that we just found. And back in 08 to 09, natural gas was down 51% from monthly high, 0% away from monthly low, up or down 12% from 10 simple moving average, and down 12% from 20-day simple moving average, and down 19% from 50-day simple moving average. So among the two trends, on the trend in the past. Back then, it was down 12% from 10-day simple moving average. Compare that to the current trend, which is up 2.6%. So there are technical differences among the 10 simple moving average and as well as the 20-day simple moving average. So do keep that in mind. And these models are now available in the link below, so do check it out. If you enjoyed this content, feel free to like, comment, subscribe, and thank you for watching.